Okay, I'm here with James Pursaill, CTO of Plend. Jamie, Plend, what do you do?
So Plend is an open banking powered lender. We built our own engine from scratch, essentially, to write better quality loans than the competition. And what that allows us to do, it means we can write loans that are more affordable than the competition, we can write loans that are larger than the competition, and it means that we can lend to people who would be traditionally excluded from affordable credit.
And what are the kind of factors that mean that somebody might get excluded from normal credit that you can tackle through being able to, synthesize all that data through open banking?
So the biggest problem comes down to limitations with bureau data. Bureau data is very good at telling you whether or not someone's got a mortgage. It's very good at telling you whether or not someone has had a good relationship with credit in the past. But it's not very good at telling you if a young person who hasn't had a chance to build up their credit score yet is creditworthy or not. It's not very good at telling you if someone who has just arrived in the UK and they've got a job and they are doing very well for themselves, but again, they haven't had a chance to build up their credit score over the last 1-2 years, whether they're creditworthy or not. And it's not good at telling you if someone who maybe has had problems with credit 2, 3, 4, 5, even 6 years ago has basically turned the corner. They've got a job now, they are paying their bills on time, and actually they have become a responsible person who you could safely lend to, and the bureau data can't tell you that.
I'm not a lending expert, but that sounds pretty powerful. What is it that's blocking further adoption of that kind of technology?
So I think for a while it was seen as a nice to have, right? So you could basically refer customers who you weren't too sure about to open banking. You could use it to verify income, but it was seen as a hassle to implement. It was seen that there might be a drop off, if you ask people to connect their open banking, or what if it's not quick enough? What if they go to another lender? So the easier option was just to use bureau data on its own. And I think what's changed is the economy's changed, cost of living crisis, and it's not. It's changed from being a nice to have to an essential.
Yeah,
that's
going to be my next question.
Right. That's the biggest thing that basically has transformed the urgency with which it's important to get people to connect their open banking data.
And how do we tackle some of those? What's the way to get over those kind of blockers?
I think it will happen. It'll happen naturally, because if you use open banking data for everyone that you write loans to right now, it means that you can write affordable loans. It means you can write larger loans, while the competition will either be saying no, or they will be offering loans at a higher rate, or they will be offering loans that are too small to do anything relevant.
How far off do you think we are of being able to prove that out in the risk models that you can build in?
I think, to be honest, we're there now. I think that the problem for a long time with open banking was that you needed to have a few years performance history in the loan book to say, look, we've lent out using open banking data, and look at the results 2 years from now, 3 years from now. So there were people who were saying, 2 years into open banking, 3 years into open banking, oh, we're not too sure, oh, maybe it's a nice to have, bureau data, it's tried and tested. I think now that we're 5 years in, we can see when you look back that open banking has made a big difference, and the way people are basically interacting with money these days is changing. So if you take something like buy now, pay later, right? Buy now, pay later has overtaken credit cards as the leading source of credit for under 35s, right? So buy now, pay later is still pretty much invisible to the bureaus. So if
but
you
not
want,
totally, right? A couple have got arrangements with
the smaller ones, none of the major ones. The major buy now, pay laters are reporting into the bureaus, and you still don't have a depth of history, right?
Yeah.
So the problem is, if you want to lend to the under 35 space right now, and you don't know whether or not they're overexposed to buy now, pay later, how can you lend safely into that space? So it's not just cost of living crisis, it's also that, the way people are borrowing is changing, and open banking can give you an insight into that, whereas the bureau data just can't.
Fast forward to the end of 2023,
Yeah.
Everything's gone really well in open banking.
Yeah.
What kind of impact has that had on the credit market and the way that people interact with credit?
Okay, that's a really good question. So I think the biggest thing that's going to change in 2023 is VRPs, so variable recurring payments. And it's not going to change in the way I think a lot of lenders are kind of originally thinking it would. I think a lot of lenders right now are saying, oh, it's going to allow us to instantly reconcile our repayments. You know, we're going to, instead of waiting kind of 3, 4, 5 days for direct debits to pay us back, we're going to get it back same day or the next day, and that's going to really help with our accounting, with our reconciliation. But what's really exciting, I think, about VRP is that when you combine it with being able to see someone's open banking data on a rolling basis, we move away from this model where we just say, okay, you have a loan with us and you're taking the same amount every single month, no matter what your financial situation is. And there's a combination, I think, that's coming, that will be coming by the end of this year, with VRP, with the open banking transactions, where actually you're getting more of a dynamic repayment schedule. We say, okay, look, you actually have had a really good month this year. We're going to take a little bit more out for your loan because you can afford to do it. Oh, Christmas is coming. Actually, we've seen there's a lot of spending. Actually, you can't afford to pay quite that much back this month. We're going to pull in a little bit.
Yeah,
and I think
we're seeing that quite a lot in the payment space around VRP, where, you know, a lot of payments channels are looking a little bit commoditized, and banks are looking for a way to monetize these new channels, and then and they're kind of coming round to this idea that open banking, the data and the context that can provide to the payment gives a proper, genuinely differentiated experience versus a card rail or a direct debit. And I think it makes a lot of sense. Anyway, Jamie, thanks ever so much for your time.
Pleasure.